Hi, this is Paul from globaltradingsoftware.com, and this is a stocks swing trading tutorial. We're going to be using the swing trading bundle here, or elements of it. In particular, we're going to be using the Elliott Wave and the xbratalgo here to two different types of strategies, but combining together to give some strong signals, especially just before earnings. So this is MSEX, Middlesex Water Company. On the daily time frame, I'm using the trading view version of our swing trading bundle, and we're coming up to earnings. I always like to check stocks coming up to earnings, see what they've done pre-earnings, and here we've had what we would call an orderly wave 4 profit taking pullback here, leading into earnings, and then coming away from that support before earnings. We've had a 4, 5 and a 6 star buy on the xbratalgo, so that's like gathering momentum, if you like. So 6 star is the highest probability signal, so that's 12 out of 12 points of control for that to print. 5 star is 11 out of 12 and 4 star is 10 out of 12. So we have got some high probability signals here, but that momentum's built up lovely coming from this Elliott Wave 4 pullback. So we've got two instances here, two totally different strategies, but giving us signals to go long. So wave 4 initially, it comes back into this amber zone. And the amber zone represents an 80% probability that we're going to go on and hit this automated 5th wave target zone here. Next we have non-linear support with the 55 and the 89 EMA clouds. You can see it's just pushed down below the 55, tipped off the 89 and moved back up again. So that's non-linear support. So the linear support are these fib zones in these green, amber, red, and then the non-linear there. Then we also look at that wave 4 pullback on a couple of things. We look at our stochastic down below here, false breakout stochastic. And what happens is during that pullback we've got a false breakout at the top here. It's only a little one, but it still shows us reasonably good strong bullish move here. We've pulled back against on that wave 3 and crossed over in the oversold zone. Now we're moving back up again. This Elliott Wave oscillator is very important as well. We've pulled back between 90 and 140%, so that is what we would call normal behavior. So what this Elliott Wave does is looks at behavior of the trend, and this profit taking pullback on the wave 4, it has been normal. Obviously we didn't want to be too aggressive going into this trade after this wave 4 pullback, purely because we've got earnings coming up, and that happened after the markets on Friday the 29th of October. I'm now making this video on the following Monday. So some of the other things that we've got in the bundle is we talk about the bias, and then which is down here, these dots. So during that wave 4 pullback here, the dots went yellow, so there's a neutral bias. There wasn't a long or a short bias, but now as we started to pull back up, we've got a bullish bias. The greens, the dots are green. Then coming away here out of this 55, we've got 4 star, 5 star, 6 star buys on the xbratalgo. For me, I liked it. Once we got the 4 and the 5 star, I wanted to get in before earnings, because looking at previous earnings reactions, even if the earnings were pretty flat and no real surprises, earnings were reasonably positive here. It's a utility company and they make money. So for me, the 5 star buy was good enough. I wanted an entry 110.08 above this pivot point here, really. That's where I wanted to make sure I got in. The stop for this strategy, now usually with an Elliott Wave, you stopped all the way down below the 4th wave pivot here, but because I've had a 4, 5, and then obviously the 6 star buy, I'm going to make sure I was below these pivots just before the 4 star buy here. I want to get a better risk to reward to that 5th wave target zone to over $122. So it's an aggressive entry really on the 5 star buy, backed up by we're on a 5th wave move. The wave 4s behaved very, very well. And then earnings came in Friday after the market, and they were pretty, to be honest, it was a balanced earnings. It was no real sort of surprises, if you like. So post-market there wasn't a great deal of action. Pre-market now is gapping up slightly to 10.25. It's only gapping up 13 cents, but you know, it was an educated play on earnings, but it was backed up by the wave 4, and the Elliott Wave indicator suite was really, you know, behaved very, very well. We started to move away from there, but then a totally different strategy gave us that 4, 5, 6 star buy signal. So we were very strong. The volume was picking up, momentum was picking up away from that wave 4 pivot. Our bias was green. There was a lot saying you need to get into this trade, so I did, and I'm in it now. We're pretty much close to where the entry is right now, but again, I just wanted to show you using some of those tools of that swing trading bundle to find these high probability moves. Now, I've not got a crystal ball. I don't know what's going to happen to the right, but I wanted to make this video now because now is the time that we've had earnings. The earnings reaction wasn't negative as I suspected. The market sentiment after that wave 4 pullback, and then we've got those xBrat buy signals is all bullish. So there was no reason not to get into this trade. I've been really aggressive with that stop to get a decent risk reward. So risk $10,000. If it comes back against me, lose $10,000. But if it works and everything goes according to my plan, this could be worth $16,000. So 1 to 1.6 that risk reward to that top end of that trading zone. And now don't be too alarmed if it goes above that fifth wave target zone. I want to give you an example on Amber right now. Amber is a similar sort of trade that we had, and that's blown through the fifth wave target zone. So this wave 4 pullback hit the fifth wave, but now that's been printed a wave 3 because that was longer than the original third wave. So it's blown through that fifth wave target zone. So this is why when we look at those risk rewards, we have that initial target, but don't get too hung up on actually. NYT is another one that I'm in right now, and that's on the daily. We've had 6 star buys. We've had an Elliott Wave pullback, and now it's hitting those target zones again. So don't get too hung up on where we're going to go for target wise. It's only a prescribed it's a probability that's going to hit that area of price. In 60 to 70% of the times it will blow through that price. So right now, hopefully this has made sense to you guys that the swing trading bundle, with signals wise, we look at Elliott Wave, we've got the xbratalgo, and we haven't touched on it today, but we have the auto harmonic patterns in there as well. So 3 different types of strategies to give you signals. And then obviously to measure that behavior as well with those Elliott Wave pullback zones, with those EMA clouds, the bias, and everything all combined to give you lots of different trading opportunities to swing trading stocks. Hopefully this helped. Speak to you all really soon.